Welcome back, everybody, to our next session. I'm very happy to have Steffen Murau Matteo Giordano present a recent contribution named Forging Monetary Union Through Novation, the Target System and the Politics of the Central Banking in Europe. Steffen leads a major research project at the Global Climate Forum in Berlin, and Matteo is a PhD candidate, hopefully close to finalizing his PhD at SOAS. Maybe there's an update on that front. Very happy to have you. Like we said, we try to keep the session within 45 minutes, so we have a little break before the next session. But with that, Matteo, Steffen, over to you. Thank you very much for presenting.
Yeah, thank you very much. Can you all hear me? Perfect. Okay, so thanks, Jay, for organizing this. Thanks, everybody, for being here. Matteo, are you here as well? I mean, just a shout out to you. Thanks for dialing in. Excellent. So this is a joint project that we've been working on, I think, since early 22. We both have a shared interest in the target system. I guess Matteo's PhD project is connected to monetary subordination in Europe, which had a lot to do with target and how this works. And I had my project on the European Monetary Union, and I felt that the existing literature on target has never fully satisfied me. And so we started collaborating, and I guess we mainly wrote this paper in 22, and then we submitted it to a journal in summer 22. And just 1.5 years later, just before Christmas, we also got it published in the Socioeconomic Review, which is a quite nice journal, I think, for this kind of research. So what is this paper about? So I guess those of you who know about the target system, you basically probably know it in this form, right? So the target system is the real-time gross settlement system that exists between the European central banks since the introduction of the monetary union. And it has become known through the target 2 imbalances, right? So what we see here is basically from 2000 to 2008, the surpluses and deficits of the various European central banks, which necessarily have to add up to one another. And then if we go further to basically 2008 to sort of end of 22, more or less today, we see like massively rising target imbalances. And the big story is Germany is the surplus country, which is here like in light blue. And then the Southern European countries, in particular in the Euro crisis, became the deficit countries, here with Italy in red being the biggest one. So those are the extreme cases. And then there were all these stories about, well, this mirrors trade imbalances and so on. And there was the big debate by Hans-Werner Sinn about it. But we both, Matteo and I, were dissatisfied with this for various reasons. And so what we thought, what is a nice empirical hook, right? If you look at this, then this is a story about imbalances between national central banks or their countries and how do they relate together, but who spikes first, right? So, and I go back to this, it's the black thing here that goes very much up, and that is actually the ECB. So the ECB is only properly measured from 2008 onwards. So before that, we have just a proxy, which is just the residual between all the national central banks. But if we go here further, so we see that the first huge spike actually during the global financial crisis is the ECB. Only then Germany starts taking up. And then the ECB goes down here spikes again a little bit about there. So there's something going on which really doesn't fit to this trade imbalances story, right? And so it's just the entirely neglected role of the ECB in the target 2 system. And yeah, so we wanted to look at this. So that was our puzzle. What I'll do in this presentation is to tell the story that we have about the ECB and basically the transformation of the ECB balance sheet in the Euro system and the target system by looking at how it was before monetary unification, which happened in 99, and then a big story, which we have like nailed down to centralization, repurposing, and operationalization of the ECB balance sheet, which should all be very, so the centrality of the ECB balance sheet should be very clear, I guess, to a money view crowd, right? Because the ECB balance sheet is at the apex of the Euro system somehow. And yeah, so at the end of this presentation, I hope we will all be able to make sense out of this puzzling dynamics of the ECB position. So we zoom back to history, right? So the origin of the European Monetary Union, so the European Monetary Union was decided with the Treaty of Maastricht in 1992. And the Treaty of Maastricht said that the monetary unification monetary union should start in 1999, so 7 years later. And they introduced the European Monetary Institute, which is the predecessor of the ECB. So they set up the EMI, European Monetary Institute, in 1994. And it was supposed to figure out how this whole monetary unification should actually work. And what they said is that they want to have a single monetary policy and smooth cross-border payments. So that were the tasks for the EMI. And it had like 5 years to figure this out and how to make it work. And they decided that they would introduce something that is called TARGET, so Trans-European Automated Real-Time Gross Settlement Express Transfer System for Europe, which would be basically the heart of monetary unification. And what we found interesting is that when they actually started operating TARGET in 1999, it was completely left open how the claims and obligations of the national central banks that they would have against each other in the TARGET system, what you would do with this, right? So they wanted to unify the monetary system, but they did not have any solution for open claims and obligations, which were actually the entire problem of monetary politics in Europe in the decades before that. So they introduced it really as a minimum viable project, which had not provided a solution to one of the core underlying issues. And they only solved this later by introducing a procedure called novation, which means that the claims and obligations that the national central banks have against each other at the end of each business day would be shifted to the ECB balance sheet, which would then become a central counterparty, basically, which was not originally intended. And so this was really an ad hoc decision behind closed doors, but is today codified in the Target 2 guidelines. And you can hardly read anything about this. We found some papers by the Banca d'Italia, some ECB publications refer to it, but yeah, this novation procedure as an ex post decision has not received any academic scrutiny so far. So this is a timeline. I do not want to dig too deeply into this, but yeah, so we see in 99, this is when monetary union starts. Here it's called also stage 3. Before that, we had the European monetary system. 92 was the Treaty of Maastricht. 94, foundation of the Monetary Institute. 99, this all starts. In 98, the Monetary Institute becomes the European Central Bank. And then this novation procedure that we're looking at, it starts in November 2000. So still in the first, after less than 2 years. Also because it will maybe be relevant later. So Target was changed into Target 2 in 2007, 2008. So that very much coincided with the global financial crisis, but there was no real causal relation, I guess. The difference between Target and Target 2 is really more of a software or like a technical operational issue. So we do not think that there was any big change in terms of, there was no change in terms of balance sheet accounting, what we look at. So our arguments in this paper is that the literature in international political economy typically connects monetary unification to the introduction of the single currency. So we have the euro and no longer the Deutsche Mark or Lira, and that there's a single monetary policy, but that there's a payment system component to it. This is really typically overlooked, and Target is the payment system. And so we say what had to happen for monetary unification is to stitch together the monetary systems at the apex. So you had different like national monetary systems, you want to unify them, so you have to decide how you stitch them together, how you design the future apex of this construct. And we say that there would have been many different options to do this, and Target and the novation procedure are probably not the best one you could have chosen, but we think it was the only one that was politically feasible, and it was probably also the only politically feasible approach to introduce it, have it running while it's not clear what happens to open claims and obligations of the central banks, and then only ex post, when there's no way back anymore, and it's very depoliticized behind closed doors with silent politics, as it's often called in like political science. So with silent politics, introduced this novation procedure, which had like huge implications, but has so far not been really looked at. So now we come to, so this is the upshot of the paper. Now we come to some balance sheet exercises, and I'll walk you through this. So we start with the European monetary system. This was in place from the 1970s, basically until 1999, when the European Monetary Union started. So how did cross-border payments work here, right? So idealized, we have here the German, so we always use the German-Italian example, right? So we have the German central bank, the Italian central bank, and banks located in Germany, Italy, issuing reserves. There's a liquidity insurance that the Bundesbank gives to German banks, liquidity insurance that the Banca d'Italia gives to Italian banks. So if there's now a cross-border payment happening, this happens through correspondent banking systems. So you have German banks and Italian banks. So those are our idealized balance sheets. They hold deposits at each other. So German bank has a deposit in lira at the Italian bank. The Italian bank has a deposit in Deutsche Mark at the German bank. And now we assume that there's just one payment happening from an Italian consumer to a German consumer, which basically turns Italy in a deficit country and Germany in a surplus country. So this would be operated and processed through these deposits that the banks have with each other. It goes from the Italian consumer to the German consumer. And then it ends up with German bank giving a loan to the Italian bank, so funding the payment imbalance. So, and this means that any sort of payment imbalance can be privately funded, as we show here, or it can be publicly funded through the central banks. So that's the fourth step that we show here, when basically the loan from the German bank to the Italian bank is substituted with a loan from the Bundesbank to the Banca d'Italia. So which leads basically to down here, to just the private balance sheets like contract, and the expansion is on the central bank balance sheet. So basically we shift up the imbalance and the hierarchy upwards from the banks to the central banks. So there we have basically you can call it the inside spread and the outside spread, but this is the hybridity of the payment system. So ideally you would maybe have the first resort funding on the private balance sheets and the last resort funding on the public balance sheets. But the funding happens in the currency of the surplus country. And the question is, how is this settled? Is it ever settled? How much do we need to settle? And those were the ongoing conflicts all the time, right? I mean, not just in the European Monetary Union, but it's a broader issue for international payments. And so a lot of conflicts was about these imbalances. So the European monetary system had like fixed but adjustable exchange rates. So there were always these exchange rate adjustments, and there was a peg, and they tried to keep the countries in the peg. And it never worked out so well. And so what they did, I think, in the late 70s was to introduce the European Monetary Cooperation Fund, EMCF, as a hierarchically higher balance sheet, which ran the VSTFF, which is the very short-term financing facility, which was basically a predecessor of the ECB and the target system that came with it. And the idea was that, so the EMCF could provide some elasticity and solve issues of this cross-border funding if there's an imbalance. And in particular, they introduced this ECU, so the European currency unit. So it was denominated in ECU, which meant that the Italian central bank was no longer only in D-Mark indebted to the Bundesbank, but that there was some more fluctuation, which could also be to the benefit of the Banca d'Italia. But this never really flew. So and I think in the 90s, Italy at some point wanted to borrow through the EMCF, but the Bundesbank still had veto power, and the Bundesbank declined it and drove Italy basically off the peg. So this EMCF never worked well. That's why in the 1980s, in particular, also under Jacques Delors, there was always a big debate of like finalizing this monetary and economic integration of Europe and really getting the monetary unification done, which a lot of like European policymakers had dreamt of for a long time. And it really happened only when the Berlin Wall fell. So that was the situation when, you have to understand, in the late 80s, there was still no official peace treaty between the European countries. Germany was divided. And they said that there was a big German-French bargain when basically Kohl and Mitterrand met. And so Mitterrand basically said, okay, if you give up the D-Mark and agree to monetary unification, then we agree to German unification. And so they did that, and this gave rise to the Treaty of Maastricht. And then the big question, so how do we do this now? How do we stitch together those balance sheets? And this is where we have a thought experiment, and we basically run through 3 different options. So how can we think that we want to stitch this together? So the first scenario is to just introduce a single central bank. And that would maybe be the easiest option, right? So let's abandon all the Banca d'Italia, Bundesbank, Banque de France, whatever, just have one single central bank, and then we no longer need to really distinguish between the German banks, Italian banks. So they're all just now the European banks. And it's not so far-fetched, because this is also what happened during German unification, right? So Eastern Germany and Western Germany just got one single central bank, which was the Bundesbank. So the Western German central bank took over. So why not do something like this? Take one existing central bank, but then do we really want this, right? Should the Bundesbank, which was sort of the leading bank, take over all monetary systems in Europe? That would be like hell, I guess, for all Italian, French, or Dutch policymakers, right? Do we set up entirely new bank and close all other banks? So this would have been too crazy. So an alternative option would have been to introduce the American model, where you basically keep all the national central banks and you introduce like an asset position, the interdistrict settlement account, which you see here, where all the central banks have just like fictitious sum as their assets, and then as their imbalances, they go up and down, and then they agree on some sort of settlement procedure, maybe with some other securities like these famous European safe assets or whatever. But the implication of such a system would be that you still have one leading central bank. In the US, it's the New York Fed. In Europe, it might have been the Bundesbank, that basically implements monetary policy for the entire monetary union, which then also for like French or Italian or Dutch banks would also not be what they want, because they actually wanted to break the dominance and power of the Bundesbank in the European monetary system. So as they tried to figure out how to do this in the 90s, they came up with this idea that they introduce a European Central Bank, the ECB, but just as the N+1 balance sheet that is extremely sidelined, and all the other countries like Germany and Italy, they keep their central banks, and the central banks are responsible for implementing monetary policy. And the ECB is basically the forum to decide on monetary policy, but it does not have in any way operationalized or meaningful balance sheet. It's really just the N+1 balance sheet. It doesn't have its own banks. So it's really just sidelined. And that seemed like a good sell to, that's what we argue, to the national central banks, because they did not really have to give up that much power, right? They would still implement their own monetary policy. And they would be connected through this target system. So you still have these open claims and liabilities against each other that we saw happened in the EMS, right? So the Bundesbank lends to the Banca d'Italia. But that is our point. There was absolutely no clear decision what would happen to these open claims and obligations, should there ever be settlement. And so they introduced this in 1999. It started running. And then in 2000, they introduced novation, which meant that the target claim that the Bundesbank would have on the Banca d'Italia would be shifted to the ECB. And so we say this basically, through the back door, put the ECB at the apex of the Euro system, because now suddenly, actually all these target two imbalances that we see, it's not the Bundesbank who owes the Banca d'Italia, but it's the Bundesbank who owes the ECB, and the ECB who owes the Banca d'Italia, right? And de facto, so it changed the ECB balance sheet in 2 ways. It put it at the apex of the hierarchy, but it also created something that we call the CCP department. So that's a bit of a, it's our invention. So we say analytically, we can divide or subdivide the ECB balance sheet and the CCP department, where we just have the target claims and liabilities, and the policy department, which is everything else, right? And so the CCP department you hardly ever see, because it all nets out all the time, right? And whenever we see anything happening that the ECB actually does, it is the policy department that plays. And so from November 2000 onwards, when this became effective, the Euro system looked like this, which was absolutely not what was intended, what the EMI planned. And it's arguably much closer to this model of the single central bank that would not have been feasible in the first place, right? So done by ECB staff through silent politics. Okay, so this is what we put on the radar. And now what follows from this? We say two things follow from this. So the first thing that follows from it is connected to the CCP department, and it's that we see here a repurposing of the ECB balance sheet for funding cross-border imbalances. So this here is the ECB accounting balance sheet. So if we do not net out, so basically if we put in the CCP department into the figure and do not net out intra-Euro system claims, how it's usually done, you see how the ECB balance sheet increases massively. So those are the asset positions, in particular during the Euro crisis, in the run-up to the whatever it takes speech by Draghi in 2012, and yeah, continues increasing. And so this is really elasticity for cross-border funding to maintain par between bank deposits and reserves within the Eurozone in different countries. And because all imbalances are now shifted to the ECB, it becomes entirely implausible to ever ask for any sort of repayment. So there is no way to settle the open claims anymore, right? So, all the like mutual positions between the surplus and deficit national central banks are to the CCP. So this is the liability side, which basically makes the monetary union irreversible. You cannot plausibly dissolve it anymore, but it also is what sort of kept the different monetary systems together during the Euro crisis. So yeah, the ECB balance sheet through this novation decision basically predetermined that the Eurozone would not fall apart during the Euro crisis, which to our mind is an argument that has not been sufficiently made so far. But now we come to the operationalization of the ECB balance sheet, which will lead us back to the puzzle that I started with. So we have the CCP department and we have the policy department. And so a lot of rules were introduced by the EMI, what the NCB, so the national central banks, would be allowed to do and what they're not allowed to do. They introduced this capital key. But the ECB, because it was a marginalized, unimportant balance sheet, has no such rules, right? So suddenly you have this balance sheet that you can use for any sorts of tweaks. And through novation, you get it at the apex of the entire system. And basically under Draghi's leadership, they started making use of, I mean, it started before actually, but so they started making use and tweaking the ECB balance sheet, and which will then ultimately lead to these changes in the Target 2 system that I started with, right? And there are two main unconventional monetary policy operations that the ECB balance sheet did that then led to the changing Target 2 positions. The first one are the swap lines. So swap line drawings lead to spikes of the ECB, positive spikes of the ECB balance sheet in the Target 2 system. Why does that happen? Because, well, the ECB borrows dollars from the Federal Reserve Bank of New York, and then it lends them on to whatever national central bank that needs them, which then like lend them on to their own domestic banks. But the counter booking is a Target 2 claim. So that's why whenever the swap lines are drawn, you see this Target 2 claim, and then you have a maturity maybe of 3 months, and then this goes down back. That's why temporary spikes. And the second unconventional monetary policy, what the ECB balance sheet was used for and how it was operationalized, is during these asset purchase programs. So there are many different asset purchase programs. They don't all have the same rules, but some of them use the ECB balance sheet as a way to park some of the assets that are being purchased. And the reason, so this is also an example how this works. So maybe the Bundesbank buys a sovereign bond from a German bank, and then the ECB buys it from the Bundesbank to hold it on its balance sheet, because there are no rules how many or few are allowed to be there. And this leads then to a target 2 deficit for the ECB. And so that's why we see this is the figure that we started with. So we have here these spikes recurring also during COVID. But here, basically from the asset purchases, the ECB position goes down, 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 down. It's actually by now the third biggest target 2 deficit entity that we have here in the figure. So to conclude, that's a paper that has tries to trace the introduction of the target system and the changing role that the ECB plays in it. Maybe the most direct argument that we make to the IPE literature on central banking in Europe is that we say that from a balance sheet perspective, monetary unification was not just introducing the euro as a unit of account or creating the ECB as an institution or so on, but it was really the question, how do we stitch together the balance sheets, right? And there would have been different options. And it's very interesting that they had sort of an ex ante part and then a secret ex post part to it. That's why forging monetary unification, right? That's the name of our paper. Then the second point is that we say all the debate about target 2 imbalances during the euro crisis and so on, everything we see play out there is a consequence of this novation decision, right? You cannot settle it. There's no limit to the cross-border funding that is provided by the ECB CCP department. Yeah, so actually the euro crisis would need to, literature on the euro crisis would need to focus much more on the implications of this novation decision. And then the third point, which we make, which is really to the very broad literature, and I guess this is just also something that we don't need to convince anybody here in the Money View crowd, but so that it really makes sense to look at how the interlocking balance sheets are organized, who is able to play around with it, who can make some small technical tweaks, because some small technical tweaks can have huge implications. And novation is one such, because basically the entire post-World War II international monetary politics debates of Europe were sort of solved only with this decision that you shift the claims and obligations to a hierarchically higher balance sheet, and then there's no way to settle them anymore. Yeah, so this is such a powerful decision, and yeah, we were actually surprised that nobody had really looked at this before, and this is fast.
Thank you, Steffen and Matteo, for this presentation. I think we have a good 10, maybe a bit more minutes for comments and questions. There's a lot of questions and discussion in the comments. I'm not sure if somebody wants to review that, but maybe we take questions by raise of hand first. Yes, I'm not sure what your name is, but you're from Hungary, so let's go.
Yes, I have some points. First, it was that we have to speak about ECU, European Currency Unit, because we have to. I was involved in the Euro project long years, and first we have to speak about ECU because they were big lessons. Why not ECU? Why euro? And I think that he is very important to say that ECU was a basket currency like SDR, for example, and we couldn't trade them from technical side only 186 days in a year, for example. Then we have two ECUs, private and official. It's another study why. We had, before the introducing of euro, we had to unify these two ECUs, official and private. Official was introduced in 1979. Private was organized by secret agreement of 7 commercial banks, then 11 commercial banks. It was why we could not make American model, because it was not one country. we see the German unification of Germany model and Reichsmark, the Swiss franc, and Italian lira in the 19th century. The second target is not only one system for real-time gross settlement. There is the Euro Banking Association, because it was the ECU Banking Association who do the settlements for Euro 2. It's a net system of Euro, and target is the gross system without any credits. I think that I am more technical person, and I think that it's very important to speak about this. Thank you.
Thank you, Marta. I found your name from the chat. Thanks to Adam. Any other questions? Karen?
Thank you. I seem to remember that there was a problem during the Greek crisis with the target system and the ELA, the liquidity system, that where this whole thing did not work automatically because the ECB refused any further support of liquidity to Greece. Have you taken that into account, that there may be some crisis where the target system will not just automatically fund every deficit and surplus?
Yes, but target is not a net system. There is a gross system. If a country has no, central bank has no money in to cover his account at the European Central Bank, you couldn't make any operations. And if you use your credit lines and it's finished, you have to stop your payments. It's a typical. It's so like as the central the gross systems functioning.
Yes, but you also say that there's automatic crediting across the system, so that nobody gets into real trouble if they're in deficit. So it must have some real function.
Because your credit limit is not your credit line is not unlimited. Your credit line is limited. That's why your payments can be stopped. Exactly. And you have to wait for liquidity.
Yeah, so there's a problem.
Yes, it was the problem, for example, of Greece.
Yeah.
Okay, great. Thanks for those interventions. I see there's a lot of clarifications also in the chat. I'm not sure, Steffen, if you were able to review those in the meantime, but we'll give you.
I haven't looked at them now, but
let's just first respond to these first questions here first, and then we go back.
I wanted to pull in Matteo. Maybe do you want to respond first?
Yes, of course. I guess the issue of whether there is a limit to the payment of the balances, it's a matter of the commitment of the ECB to the survival of the euro. If you block or if you do not support the cross-border payments, what you're essentially allowing for the power of the different liabilities of the different national central banks to break. So I suppose, yes, you can prevent the cross-border payments from taking place, but in that case, you have to be to accept the euro located in different monetary jurisdictions to break par, and so it boils down to the commitment of the monetary authorities to the common and single currency. And in terms of the ECU, yes, I agree that was actually our starting point. It's just that we then decided to focus on the target system. And yes, I mean, when we talk about the very short-term financing facility, that is all denominated in ECUs. And if you actually look at the paper, we discussed the ECU, especially because of the difference between the official and the private side of the European currency unit. That is as well a very interesting point, because of the various hierarchies of money, if you want, that are not that where we cannot find any official backstopping to the private one. And again, with the target system and with the structure of the euro through target and through the ECB and novation, one of our argument is also that what you solve this mismatch between or this lack of an official backstop to the private one, which obviously wasn't present with the ECU, given that the private one was privately issued and the power wasn't guaranteed in any form. So yes, that is the starting point. I agree entirely that the ECU is actually very interesting as a currency.
I guess what I would like to add on the ECU is, I mean, the euro was originally supposed to be called ECU, right? So there's actually there's just a name difference. So I guess in the original planning of the of stage 2, they always talk about the ECU, and then only like shortly before 99 they decided to rename it euro, which could be a better name. So the change here, so you could also call it ECU today if you wanted, right? I guess that the difference is that you had indeed, so in the European monetary system, you had fluctuating exchange rates from the national currencies to the ECU, and then you had like one day when you sort of, okay, now you fix it irreversibly, and then this whole basket structure goes away. But yeah, so this is really the aspect of fixing the exchange rates, I would think.
Great. I think we have time for one more round of questions. Maybe if anybody wants to jump in, please feel free, but I'll just pick up something from the chat.
I mean, one thing I see in the chat is if there are interest payments on these target balances, which in my understanding there are, but then they are just also redistributed among the central banks, and so even the changes of the interest payments would just net out again if you do not have a gross view on the euro system. So they don't really matter at the end of the day.
Okay, Marta, one more time.
Yes, thank you. Yes, it's. I was reflect for this last topic. The rest first, it was the case that the name has to be ECU, but in 1993 was a finance crisis, and in that case, the banks come back to Deutschmark, and that's why it was decided not to use for this currency the name of ECU, because of this experiment that when was a trouble in the payment and settlement systems and liquidity, the banks came back to German. Oh, and we can say that it can be a German mark, Deutschmark zone. And the French, Italian, other country was against this. And that's why it was decided in if I remember, in 1996 or 97, that the name of the new currency will be euro and not ECU. But the settlement system of private ECU system was in Paris. It's the ECU Banking Association, and after it was changed to Euro Banking Association, and it's nowadays it works too for the small payments. It's the SEPA, if you remember, so if you know this name, SEPA, it was historically the ECU payment system, and the settlement for ECU Payment Association, yes. So the name of euro was chosen after the crisis of 1993. Thank you.
Okay, we got maybe time for a quick response by Steffen and Matteo to close out the session before we go into break.
Was there any open question left? I guess we maybe all are happy to have a bit of a break, so I'm good. Matteo, do you have anything else?
No, absolutely. Yes, I suppose the point that Steffen was making in the presentation when we showed the VSTFF, in that mechanism, it was easier. And actually, what happens is that a central bank, one of the central bank in the euros in Europe, could simply say no to the counterpart requesting requesting the liquidity. So that is indeed what happened, and that is at the very heart of the 1993 crisis. So it does make sense to change the name after the failure of the experiment.
Okay, we'll leave it there. Thank you very much, Steffen, Matteo, for the presentation. Thanks for the discussion, everybody. We'll be in 10-minute break, and then we'll have Katarina Pistori in for a fireside chat with Asker Torfason. See you in a couple minutes. Thank you very much.